In this episode, we are going over the June stats for the Greater Vancouver Real Estate Board here. They've just come out hot off the press and things are changing. There is always lots to touch on. And in this episode, definitely a few surprises, including we saw prices do something they have not done in about 6 months here. So we're going to get right into this. And of course, if you want to know how to navigate the upcoming marketplace, whether you're looking to buy or sell, invest, or both, well, Ryan and I, we sell over 100 homes per year, and we would happily meet up with you and talk about how you can best strategize for the upcoming marketplace. Just reach out below. You can book a meeting with us on that Calendly link. So let's dive right into it. June 2023 real estate stats for Vancouver. We always start with the sales numbers because the sales kind of talk about or demonstrate almost the health of the marketplace, if you will. What is the volume of people buying and selling real estate? Well, last month in June, we saw 2,988 homes sell. Well, how does that stack up? Compared to last June, a year ago, it was actually 21% more homes sold last month than a year ago. And that's a pretty significant number. But let's keep in mind, June of last year was when the market was going down and rates were going up and everybody just kind of paused. So understandably, with things even as high as they are interest rate wise, people seem to have definitely absorbed all of that and are back into more of a buying pattern, if you will. Sales are down compared to last month by about 14%. Fairly typical. We often see June be kind of the beginning of the summer months where sales volumes do tick lower. But let's also remember, we did see that largely surprise rate hike come in last month, which would have put a few people on the sidelines as well that may have otherwise considered a purchase. And lastly, looking to the larger picture here, the 10-year average, overall sales were about 8.5% below the 10-year average, which again is not adjusted for population growth. Not too surprising there. Again, we still have extremely low inventory. So to have less sales volumes overall is to be completely expected in this type of landscape.
Yeah, and to follow that up with new listings. So new listings in June, 5,348. That is a 1.3% increase over June of 2022. So a little bit more new listings coming on there. Again, a little bit, I guess the sentiment is a lot better, like Dan mentioned, than it was of June last year. This is only 0.5% lower than the previous month. And only the second time this year where month over month sales volume has actually declined. So where do we stand comparatively speaking to the 10-year seasonal average? Well, we're 3% below that. And if I were you, thinking historically here and looking back on how the market typically acts over this period, you could expect listings to continue to decline throughout July and especially August. It's a typical summer trend, and come the fall, we will likely see a larger increase at that point. So a lot of people just away right now doing other things. Their focus typically doesn't fall on real estate, especially when it's 35 degrees outside.
So with those new listings, where does that sit with inventory, which has been absolutely the story dating back to about January of this year? Well, we ticked above 9,000 active units for the first time in 6 months. It has been the flattest line of inventory data we've basically ever seen since the data started being collected. So 9,325 odd active listings today. And while we have seen 6 consecutive months of increases, it's still, like I said, is only just cracked 9,000 for that first time in 6 months. We're only up about 1,800 units total over the last 6 months. So even with 12-month high in new listings, demand kept overall inventory very flat, as you can see here. How does it compare to last year? Well, inventory is down from last year, about 8% lower than June. And we are well below that 10-year average. So about 17% below the 10-year average. Again, not adjusted for population growth. And when we've had 2 years in a row here of record population growth, that reduction in inventory is really felt both on the rental side and, of course, on the resale side. So expect in the coming months here, continued low inventory throughout our summer months here. We may see, well, we've got the interest rate announcement happening next week, being July the 12th. Should there be a hike, then maybe some people will be forced to offload. Again, I think this would largely be seen in the investment sort of class of real estate, because people that are sort of right at the edge now of maybe their investment property either being cash flow negative or way too cash flow negative, and they're really feeling that pinch, we're starting to sort of hear stories of people wanting to offload that type of inventory. So obviously largely condos is what most investors buy. But again, overall, if you've been kind of waiting for that inventory to come this year to see what you want to buy, it doesn't look like it's coming. Right? 6 months in a row, we're barely seeing inventory tick up by a couple hundred units a month. And that's for all of GVRD here. So realistically, we're not going to see a spike by any means here. So the current reality that we're in for low inventory looks to be the same-ish for at least the next quarter moving forward.
Yeah. And I mean, we can talk about it on another pod, but that further it makes it more difficult as well when developers are pulling back on projects and they're not carrying inventory, leaving, more and more people with fewer and fewer goods. And eventually that continues to have an effect on price. But then we've got the variable of the Bank of Canada, and who knows what's going to happen on July 12th. Right now, based on everything I'm reading, it's anyone's guess. So, that said, let's take a look at the sentiment in the marketplace. So we'll take a look at the sales to active ratio. Again, this ratio tells us whether we're in a buyer's market, a balanced market, or a seller's market. Just for reference, 0 to 12%, you're in a buyer's market. 12 to 20%, you're in a balanced market. And anything above 20% for a sustained period of 3 months, you're in a seller's market. So the overall sales to active ratio right now is 31.5%, so a very healthy seller's market. However, that is down 7.5%. That's the first decrease in 5 months, which, somewhat expected in the summertime. Generally speaking, however, 7.5% is, when you look at a 31% sales to active ratio, it's about, it's a 25% drop. It's a significant drop. So if I break it down by asset class here, detached homes are sitting at 21%. So, that's down 7.5% from the previous month. And that is almost back to a balanced marketplace for detached homes. We're looking at condos and townhomes. So let's look at townhomes next. 38.5%, down 6.5% from the previous month. However, still a very strong seller's market at nearly 40%. Condos sitting at the highest at 39.5%, down a total of 6%. So all things said and done, still in a healthy seller's market. However, a bit of a downward trend. I would say that's typical for our seasonal adjustment. But that being said, if the Bank of Canada continues its rate hikes next week, we could see these numbers fall even further.
So with a strong seller's market and with this low inventory, kind of obvious what happened with prices, but you have to dissect it and look deeper, because as we mentioned last month, HPI was going to go up again in June, and it has. And we kind of know this, if you will, because the HPI is a lagging indicator when we look at median and average, which were really strongly to the upside the previous couple of months. So here we go, HPI is catching up. HPI has increased for the 6th month in a row now, increasing by another $15,000 last month. It increased by 1.3%, which interestingly was the exact same percentage increase it did back in May as well. So your average home compared to the HPI index pricing just crossed $1.2 million again. We're at $1,203,000 is the price of your average home here. And it has crossed that $1.2 million price threshold for the first time in 12 months. And this is what's really amazing too. And you can go back to the episode where we made our price predictions back in January, where we were way off, because I will tell you, we actually thought prices were going to go down the first few months of the year. Well, they've done the exact opposite. In the first 6 months of 2023, if you reference the HPI pricing metric, homes are up 8% already this year. That equates to over $90,000. So if in January the 1st, you bought the typical HPI priced average home at $1,112,000, well, today's value, like we said, $1,203,000. So you're basically up $90,400 in 6 months.
I don't know if I could have made that prediction, Dan.
I don't know if anybody did. And keep in mind, right, this is when rates were still increasing and prices were heading down right basically until December.
Yeah.
So we are still lower than last year, right? The year over year price is down, but only down by 2.5% now. So that gap is closing, if you will. And if you want to look back to the peak when prices were all time last April of 2022, we're only down 4% from that peak. So again, HPI is a lagging indicator. So let's look at the other metrics to get an idea of what might be coming next, because this was a bit of a surprise, and especially when it comes to the actual size, the actual number I'm going to share here. So the median prices actually decreased for the first time in 6 months. And this is kind of like a reoccurring theme here. Like we're saying, first time in 5 months, first time in 6 months. So the market is clearly changing when a number of metrics are changing. So median actually dropped $23,000 last month, down to $957,000. And similar to that, the average price of a home dropped as well, down $41,000 to $1,270,000. That was the first decrease in that metric in 5 months. So what is going to happen next year? Well, HPI, as it catches up to what just happened this month and the month before, it's likely going to go flat. You know what I mean? For the July stats. And August, you might see a slight peel off to the downside, potentially. We don't know yet here. And again, it doesn't really matter what prices do in the next coming months, because as we always say, if you're going to buy a home, look at it as a 5 to 7+ year investment at a minimum. But anyway, that's all case by case. So median and average, man, I honestly think they're going to do somewhat similar. I don't think we're going to see a huge drop. I don't think we're going to see an increase. You can expect them to go semi-flat line for the next couple of months here, barring, again, what do we have next week? A rate announcement. We look what just happened in the States today. We're recording this on Thursday, July the 6th, and they're pricing in something like an 86 to 90% chance of a hike down south. And so Canada's kind of feeling that pressure too. We've almost got inflation under control, as they say, but hey, there's more predictions, if you will, within the marketplace that rates will be hiked a quarter point next week. So obviously that can further restrict people's confidence and sentiment, if nothing else. You know, yes, their buying power and all that stuff aside, if they're feeling like this is going to get worse, they're not going to buy houses. Inventory will slowly tick up. Less people are buying, less competition. That typically pushes prices down. Ryan, what's your take on that?
Yeah, I wish the Bank of Canada would largely lean on leading indicators when it comes to making rate hike decisions, but they unfortunately look at lagging indicators. So I think they're going to look at this HPI price, for example, and say, holy cow, you know, prices are up 8%. We still got to clamp this down, right? And I'm just of the mind that when I look back at most of Tiff Macklem's comments over the last year, when he started raising, it was a function of saying, you know, they're effectively going to stop at next to nothing to squish inflation. So I feel like until we see GDP growth and flatlining inflation, that's when we're going to start to see rate actually turn and go maybe to the cuts. But I don't think we're anywhere near that right now, unfortunately. You know, and then you add in the pressure of what's happening, not just in the States, but around the world too. I mean, if you look at the UK right now, they're suffering tremendously with high inflation. So it's a Canada problem for sure, but it's also a global problem. And I don't think banks are done yet, including the Bank of Canada. So I believe that we're largely going to see the average and medium price maybe continue a bit of a trend downwards over the next few months. However, come September, you know, we typically see much better quality listings. We see other people getting back into the market after the summertime. So there's going to be some level of boost there. To what degree? I don't know. I think it's anyone's guess at this point. So, you know, and speaking to that, I'll touch on the days on market here because it's sitting at only 9. And that's the same as last month. And this is a very, very low number. 8 is the all-time low, right? And we only ever saw that for 5 months, dating back to 2005. So houses right now, they're still selling in about a week, generally speaking. However, I think over July, over August, maybe into September, depending on what happens with the Bank of Canada, I have to say that with almost every prediction now, I think you'll see this increase.
So yeah, I also want to extrapolate a little bit too on what you mentioned about the Bank of Canada here and sort of their lagging data that they appear to reference. Because let's remind people too, inflation was over 6% here in Canada before they
Mm.
started raising in this last hike cycle. 6%, like it was very obvious it was above the 2 to 3% threshold for
Yeah.
months and months. And then also interestingly enough, prices that had been ripping in the real estate market 20, 30% in some areas annually, we had actually peaked basically in February of last year. And there's a lot of data to help support that. And they started increasing rates in March after
Hmm.
that. So again, there was just so much information. Like this is after a 2 year cycle. This is when prices were up 30 to 40% in a lot of areas before they decided, oh, this thing's going a little too fast. So it had
Hmm.
actually naturally slowed down before they had started increasing rates. And the reason we're discussing this is because they're looking to get inflation under control. They're what, 0.4% from getting it into the 2 to 3% band that they said they're targeting. And yet they're
Hmm.
considering raising next week when the hikes have obviously pushed the inflation metric down. Like what they have done has clearly worked, if you will. And so why they're throwing kind of fuel on the fire, while we obviously don't have all the information they do, it does seem to be misguided, and it does just feel there seem to be an overcorrection, and we're hearing more and more of that on a number of channels here. So it's interesting. They have so many intelligent people working for them, they being the Bank of Canada, and of course down south in the Fed, and yet, you know, inflation was transitory. Wrong, and we can beat that, to death here. But at the end of the day, it feels like we can see what's going on, and lots of other, semi-intelligent people like us can see what's going on, and yet they're likely going to overcorrect here and then maybe push that into a recession and maybe cause a lot more people a lot more pain than they originally intended. So I don't know. I hope they hold at a minimum next week, but again,
I
markets are pricing in a hike. So
I do too. I hope they hold as well, but I just don't think they will. I think the Bank of Canada has a history of overcorrecting in these scenarios as well. When you look down south and you look at Janet Yellen, she's the head of the Treasury down there, and she's got 250 PhDs that work for her. She couldn't get transitory inflation correct. Yet, when you have, if you're a Keynesian economist, you believe in increasing money supply, and if you're Austrian economics, you've got a different perspective. But ultimately, when you add fuel to the fire and you create more money supply, and you've got more and more people chasing fewer and fewer goods, you get inflation. I don't think it's not a humongous equation. It's not that complicated, and it's disappointing, that it didn't come out sooner and that people didn't act quicker. But that being said, you look at the history of these things, the banks have a tendency to overcorrect, then they'll start cutting rates, and it'll continue on this bit of a roller coaster, if you will, until you start to get GDP growth with flatter inflation, which I'm not sure we're near that yet.
right, yeah, we've seen inflation come down for 12 full months here now,
Yeah.
12 months, and so clearly, and as we know too, it takes time for rate hikes to take effect. So it's not like it took until 12 months ago for that. Okay, yeah, sure, we're finally at 4.25% for this to start working. It
Mm-hmm.
was the 5 hikes, 6 hikes prior to that were
Mm-hmm.
finally taking effect. So to be again basically 0.4% off of the high end of the target, and to consider an increase when we're already here, again, it seems extreme. We'll see how it all washes out. Let's keep in mind too, right? They could raise by a point or like a full 100 bips like they did last year. They could also drop by that much should things get extreme. So they love to make it a roller coaster instead of a merry-go-round, I guess. So
Yeah.
that's I think that's what we have for everybody this week. So again, lots of interesting things happening in the marketplace as always. Summer's here. Markets are going to move. They're going to move slower. But again, this underlying low inventory environment is going to, I think, kind of keep prices stabilized, meaning they're not going to move up or down to any dramatic mark here. But as always, we will keep you well updated. Thanks as always for tuning in, and have an awesome day.